Hello, everyone. My name is Axel Kerstetter. I'm the Vice President of Product Marketing here at Datasite, and would like to thank you for listening and attending this series. I'm joined here today by Keith Prusek, who's the Managing Director with Jefferies and Global Head of their Transport and Logistics practice. As we all know, the global crisis has had an impact, a devastating impact on quite a few sectors worldwide. In particular, transport and logistics has been hit quite badly. As much as no two sectors are alike, but we did want to drill in some of the underlying dynamics to make sure that we get a better sense of what is happening in this particular area. And so we created a series, Navigating the Storm, off the back of which we're talking to various thought leaders, MDs, and subject matter experts to allow us to elaborate a little bit on the wider sector. And so with further ado, let me move over to Keith, who's going to be talking to us about the underlying dynamics in transport and logistics. And so, Keith, the first thing that I wanted to ask you is, from your perspective, how should companies address the current market events and volatility?
Well, it's been interesting as we've tracked our client base over these last several weeks. As most folks can appreciate, the transportation sector is generally a leading indicator. And so conversations about the impact of COVID really began for us in early January. I'm reminded of a conversation we had with an investor who had an interest in a global forwarding business based in Europe. And this was a conversation we had in early January. And his comments at the time were, this is going to have a bigger, and at this point, we weren't talking about a health crisis. We were just talking about the supply chain impact. So this virus was going to have a much bigger supply chain impact than anybody realized. And my thought at the time was, boy, that was, rather dramatic and alarmist. And it's turned out to be incredibly proficient. With some of the macro stats that we track, we look at container imports into the port of LA, most of which come from Asia. I mean, they were already trending down in January over 5%. By February, that had increased to over 20%. And so you could see the impact then, right, as China was going into the throes of this. And then obviously the public stocks have followed. So, in the numbers that we look at since mid-February, the broader market indices have traded off 25+%, and the transports are actually slightly worse, with a little bit over 30%.
Those are quite dramatic numbers. And yes, I'm quite familiar with rail economics, giving leading indicators as to where the economy is heading. So glad that you can substantiate that as well. What sort of challenges do you foresee short-term for M&A?
Yeah, so short-term M&A activity, I think for all intents and purposes, has really come to a standstill. I think selectively we may see deals get done, but usually those were transactions that were, pretty well baked before, I think, the real global economic impact. And the problem is, frankly, no one yet knows. Things are changing so fast on a daily basis. No one knows what the duration or severity of the economic impact will be. So it makes it very hard for an equity or debt investor to understand what they're investing in. I think one of the more high-profile deals within our space that folks were tracking was XPO's planned divestiture of a number of its operating units throughout the world, and that was a deal, frankly, that I think stayed in the market longer than most before they officially put that one on the shelf. And really, the slowdown in M&A is driven by a couple factors. One, there's no new issuance, in the leveraged finance markets, right? So, the financing markets are effectively shut for the time being. And second, when you talk to executives and operators, they have spent the last several weeks 110% focused on operational issues, right? And so making sure that their people are safe, managing the balance sheet, thinking through liquidity. And that really, at least over the recent period, has left, no bandwidth to be thinking about strategic M&A activity.
Yeah, I mean, that's tremendous insight. Also, the nice to hear the prioritization of some of the softer issues, operational issues over the strategic impact, but no doubt that's going to be coming quite soon. Any insight on subsectors? So I'm thinking trucking, warehousing, distribution. Where do you see the most resiliency? I know it's a tough question given the wider circumstances, but any insight in terms of upshoots that we might be able to see there?
Yeah, no, it's a great question, and it's something that as we've talked to executives, former clients, current clients, I would sum it up as, it really varies. I mean, it varies by subsector, as you just indicated, but it even varies within different operating division and service categories of companies. I think the most negatively impacted sectors, as everyone well knows, and it's all over the nightly news, are the airlines, and by extension, anything air cargo related, just because so much air freight capacity has come out of the market with the cancellation of passenger flights. Right. And so that belly capacity operates, a huge amount of, how freight moves internationally. Container shipping, right? Again, supplying retail, cancellation of sailings, the ports being closed, particularly in Asia, has been tremendously negatively impacted. On the flip side, however, e-com fulfillment, last mile delivery, any supply chain activity, that's touching grocery or other consumer CPG is actually booming. You saw Amazon come out a week ago with an announcement to hire 100,000 new workers, and on top of that, raising pay across their existing workforce. We had an interesting conversation with a current client, a global forwarder, whose business we would have thought would be universally negatively impacted, and they were telling us stories about how they were arranging air charter shipments to move critical parts for a customer whose supply chain was disrupted. They were talking about having 3 of the highest volume e-commerce days across 3 of their facilities globally in the company's history. And so I think there are a lot of segments of the global supply chain that are seeing actually a huge uptick in demand right now.
Nice to highlight positives in that case. So last mile logistics, still opportunities, and for sure warehousing and thankfully to all those companies that are still recruiting in this particular area. So we've covered off one other area that I wanted to understand better as well, which ones will be hardest hit. Let's not repeat that. How about restructuring, divestiture specifically? Have you seen any trends there, any changes? Has any major activity been occurring in restructuring?
So yes, there has been, and this is something as an industry banker within our firm, I think we're very fortunate to have within Jefferies a tremendous restructuring team, a very active leverage finance practice. So we've been having a lot of conversations with our product partners across the firm, where they are spending their time and talking to my colleagues around Jefferies that focus on restructuring. Right now, it's anything that is directly consumer facing, right? That's where you're seeing the most restructuring, refinancing. Divestiture activity, not so much. And again, I think that goes back to some of the previous commentary on M&A, is that, short-term divestitures are just so hard right now because, you think about it from the buyer's perspective, right? Being able to execute on diligence, right? Trying to figure out what sort of a fair market price is and project what the coming quarters is tremendously difficult. So really, most of it, we've been talking within the firm and with our clients about refinancing and restructuring. And again, this is about balance sheet management, liquidity availability, and I would say I would go one step further. I mean, trying to preserve as many jobs as possible, because the reality is this global pandemic will eventually work its course. There will be an end, hopefully sooner rather than later. And so being prepared for the recovery and the rebound and inventory restocking, I think there will be a period of tremendous activity when we come out the other side. And so the idea is, to sort of preserve and survive as best you can over the short term.
Yeah, that's a great point. That one thing is navigating the storms, the current storms, but after the storm is over, hopefully the sun will start shining again, and you got to be prepared for the future thereafter. What strategic questions should participants ask themselves if they do consider restructuring reorganization at this point?
Yeah, no, that's a good question. And I'll tell you, I think the advice that we would give when having a conversation like that with a client is, first and foremost, exhaust all operational measures to try and preserve cash, to manage cash flow. Even companies that we've talked to within our sector, particularly think on the e-com fulfillment side, warehousing and distribution that's focused on food, retail, grocery. When they talk to us about liquidity and balance sheet management, even though their operations and volumes are very healthy, they're now starting to track their receivables and what are your AR, DSOs, their customers' ability to pay them. So it really is multi-level, but I'd say focus first, before engaging with lenders or exploring any refinancing or capital raise, because look, it's going to be difficult and expensive in this environment. So just exhaust all operational measures first. And I can tell you, when I think about the themes that we hear in talking to executives in our space, right? The first couple of weeks of this were, as I mentioned before, the safety of the people, trying to get our arms around the magnitude, what will be the volume impact. I think that's starting to shift now, and there has been a change in tone, and we're hearing more executives talk about measures that they're doing to, unfortunately, it's difficult steps, right, of taking reductions in force, furloughing employees, reducing pay. And again, I think the overall theme here is, and this is something I talk to my kids about this at home. We talk to our clients about this, is everyone's got to do their part. And I'm encouraged by hearing stories of, executive teams that are working without pay, just to set an example. The CEO that we talked to yesterday was talking about managing the morale of the company. Because, even within their workforce of several thousand, they've had to undertake layoffs. They've had to put people on furlough. They've had to reduce hours, reduce pay. And at the same time, there are pockets, again, as we said, there are some segments that are extremely busy with folks literally working around the clock. And doing so with the uncertainty of, a paycheck next week, next month. And so I think that's been really encouraging to hear executives, talking about, maintaining corporate culture during this period.
I think it's a great point that you raised, that one thing is sort of the money-making side of things, but there's still a humane aspect to consider as well, and that operational priorities really need to come to the forefront, because at some point we'll be back to a more healthy operating environment again. What would you say are some of the advantages and disadvantages of restructuring at this point?
Well, I think it's going to be done out of necessity. That is the reality. And I think that this is something that is going to play out over the long term. One of the things that we advise, and I think is a differentiator of Jefferies' restructuring capabilities, and it's not just a product tool for us. It's something that is done hand in hand with our capital markets bankers and with our industry bankers, because again, as we've discussed, the way that companies have been impacted by this, the way that they are operating through it, and as you said, the way that they will eventually recover is going to vary widely by sector. And so in coming up with a restructuring strategy and coming up with a capital raising strategy, it needs to be done with, I think, importantly, some good nuanced industry expertise. It's the best way to get the best terms and I think employ the right strategy. And so again, we've been spending a lot of time working with our product partners across Jefferies, bringing our industry expertise and perspectives to bear. And I think that's something that is going to play out, frankly, for the weeks and months ahead.
Yeah, so what I'm hearing here is really combining some of that advisory work to combine some of the industry expertise with some of the product knowledge, making sure that subject expertise comes from multiple angles to survive the storm.
Absolutely.
Maybe not from current times, but obviously restructuring is not net new. It's been going on for many, many years, although some younger advisors, they haven't had any restructuring or any downturns since 2008, so some of the stuff is a little bit new to them. But do you have any practical advice on how to just do restructuring, some best practices, some things that sort of are top of mind? I know you already went through an exhaustive list, but just from a logistics aspect, some things that are to be considered more so than others?
One of the things that I think the restructuring team always counsels is, this should be perceived as trying to find the most efficient win-win scenario, right? It is not a one-way negotiation, with creditors or lenders. And I think it's been very encouraging, at least in the short term. Every operating executive that I've talked to, we always ask the question, what conversations have you had with your lenders, and what conversations have you had, particularly for the private and sponsor-backed companies? What conversations have you had with your equity partners? And I think universally, they have all been, very constructive. Again, of folks taking the attitude of we are all in this together, right? And so exploring creative ways to free up liquidity, to reduce debt, to think, to explore exchange offers, credit amendments, to take advantage of, I think, a whole myriad of strategies that will enable companies to continue operations, stay in business, preserve jobs, at the same time, without necessarily having to take, a complete wholesale, revision to their entire capital structure. Will that be necessary in certain sectors? Will it happen in the airline industry? Are we going to see that through government assistance programs? Yes, absolutely it will. But I think for the vast majority of operators who are, somewhere in the middle, I think taking a more thoughtful, incremental approach, again, just given how, fluid this situation is, that's really the best advice that we can give today.
Keith, that is tremendous feedback, tremendous insight. I really appreciate from your end everything that you brought here. I thought it was a great, quite a positive conversation as well, given the times that we live in terms of last mile sector, definitely having some opportunities, operational priorities, the humane aspect of preserving jobs, tons of learning here also how to address restructuring from a strategic perspective. So very grateful for your thoughts and for your insight. And as always, in the current time, stay safe. And once again, thank you for the time that you made available to this.
Thank you very much. It's my pleasure.
Thank you.